Futures on the world's most popular cryptocurrency surged as much as 26% in their debut session on CBO Global Markets Exchange, triggering 2 temporary trading halts designed to calm the market. Initial volume exceeded dealers' expectations, while traffic on CBO's website was so heavy that it caused delays and temporary outages. The website's problems had no impact on trading systems, CBO said. Bitcoin's spot price rose. It is rare that you see something more volatile than Bitcoin, but we found it, Bitcoin futures, said Zio Carpro, managing director of Shanghai-based consulting firm Carprozia. Futures are financial contracts where a buyer purchases an asset or a seller sells an asset at a predetermined future date and price. The launch of futures on a regulated exchange is a watershed for Bitcoin, whose surge this year has captivated everyone from mom-and-pop speculators to Wall Street trading firms. The CBO contracts, soon to be followed by similar offerings from CME Group and Nasdaq, should make it easier for mainstream investors to bet on the cryptocurrency's rise or fall. Bitcoin wagers have until now been mostly limited to venues with little or no oversight, deterring institutional money managers and exposing some users to the risk of hacks and market breakdowns. About 20 trading firms actively participated, CBO chairman Ed Tilly said in a Bloomberg television interview. Bitcoin futures expiring in January were 18% higher at $17,710 as of 12:25 p.m. in New York from an opening level of $15,000, on 3,561 contracts traded. It was smooth, and Bitcoin traders that seemed to be put off by futures, said Craig Elam, senior market analyst in London at online trading firm Oda. There was a fear that short selling would have an adverse impact on price, but we haven't seen that yet. The spot price climbed 4.7% to $16,383 from the Friday 5 p.m. close in New York, according to the composite price on Bloomberg. The roughly $1,300 difference reflects not only the novelty of the asset but also the difficulty of using the cash-settled futures to trade against the spot, strategists said. In a normal, functioning market, good old arbitrage would settle this, Ole Hansen, head of commodity strategy at Saxo Banker/S in Hellerup, Denmark, said by email. If they were deliverable you could arbitrage the life out of it. Proponents of regulated Bitcoin derivatives say the contracts will increase market transparency and boost liquidity, but skeptics abound. JP Morgan Chase & Co. Chief Executive Officer Jamie Dimon has called Bitcoin a fraud, while China's government has cracked down on cryptocurrency exchanges this year. The Futures Industry Association, a group of major banks, brokers and traders, said this month that contracts in the US were rushed without enough consideration of the risks. So far though, trading has kicked off without any major hiccups. Dealers said volume was high for a new contract, even though it was tiny relative to more established futures. And the trading halts took effect just as CBO had outlined in its rules. Transactions stopped for 2 minutes after a 10% gain from the opening price, and for 5 minutes after a 20% jump.